Good afternoon. Thanks for joining us today. My name is Bernard Nasuli. I'm Chief Operating Officer at iEmergent, and I'm thrilled to have all of you join us in our inaugural session called From Gaps to Growth, Leveraging Data to Capture More Opportunity. So I am joined by our CEO, Laird Nasuli, and this is going to be an interesting webinar series because especially this first one where we're both on together. And I usually have to nudge Laird to make sure that she introduces herself. So that's why I'm here kicking us off. But what we're going to be talking about is stemmed from I don't know, I guess we can call it an argument that Laird and I had about how to make use of data. How can lenders use our data? And we had some different thoughts, some different views about it. Laird was obviously, much more strategic, talking about things that senior leaders would do. And I was coming at it from, I handle the majority of our client fulfillment and our sales for the business. And I was coming at it from, look, we need to tell people what to do with the information. How can they go into a market and actually grow their business? And so we finally got together and had a little powwow, a little chit chat about, all right, yours is wrong. Why? Mine is wrong. Why? Well, we actually combined the two. We figured out, oh, actually our approaches are not against each other. They're actually very complementary. And so we're gonna discuss that. So with that, Laird, I'm gonna let you open it.
Well, and thank you, Bernard, for introducing me, since that is something I have forgotten to do every other webinar. Um, Before we get started, I mean, Bernard brought up a good point about us having this discussion and kind of trying to figure out, you know, what is the pathway, and you're going to, not to give anything away, but we're talking about strategy and execution and, where do things fall and how do we make use of that? But Bernard, I do want you to share your LinkedIn post because I thought it was very timely for what we're talking about.
Uh,
And I don't mean share it. Just tell us about what you said,
well, it was essentially the gist. This was Monday's post. I went on LinkedIn and I just said, the problem is, everybody has data. Data is not really the lacking. Data is not an issue. Getting data is not an issue. The issue is, okay, once you grab that data, once you have access to it, what do you do with it? It's the synthesis of the idea of saying, okay, we have all this data. What can we glean? What can we grab from it? And how can we actually take action against the insights that we've gathered?
Perfect. So, this really comes about from the fact that for, I think the last 10 years, we've been working with lenders of all shapes and sizes. I've had the pleasure and the privilege of working with some community initiatives where I'm working with lenders, nonprofits, government. And the one thing that's come clear is that there is still a lot of opportunity, and opportunity is everywhere. And when we were thinking about, in fact, the first name of this series wasn't From Gaps to Growth, but I was talking to someone and I was like, you just have to figure out how to turn all of these homeownership gaps, thinking about it from the more equitable lending standpoint, into growth. And so I just said, I mean, it's like going from gaps to growth. And we've used that a couple of times and it has really resonated with everyone. And the reason I think that is because I think this is going to be evidence for how and why you can be two things at once. You can be both strategic and tactical. You can be, you can have a good business and do good things for communities if you start doing it in a way that is, it is just strategic and done a particular way. And so I started it off by thinking about, for me at least, when I do a community needs assessment or I'm working on, things with convergence or, a logic model, or I'm helping one of our clients really think through what they want to do to improve in an area, or even, what are the opportunities in their areas. What's come to the front every time is how complex all of this is. And that's why I created that little word cloud on the side, that even though we can take, we can bucket all of the gaps and barriers that we see to home ownership, trust, education, credit, inventory. We also have all those little things, like what I would call barriers that are complicated, but very meaningful. And each one of those, concepts or ideas or, I want to call it things, I guess, each one of those things has at least one data point attached to it. So you start putting all of that together and it really is confusing. But at the end of the day, it doesn't matter if we're talking about the US mortgage market, the state of Georgia, Atlanta, Fulton County, or a neighborhood in Fulton County. Every market contains unmet demand. And what we've learned is that when you start looking at that demand, or that opportunity, if you will, we've learned that and seen that every lender also has what we call gaps in coverage. And it's from those gaps that I think the industry has the best opportunity for growth at a time when it's, burdened by a lot of things, like affordability and challenges with policy and, just an overall an economy that's perhaps not going to make this easy like it was in 2020 and 2021. And so part of that, and if you're looking at the slide I just put up, we talk about gaps. And if any of you have heard me speak before, I definitely have spoken quite a bit about the home ownership gap from a race and ethnicity perspective. Everyone, we talk a lot about low to moderate income and, what that looks like, what does the home ownership rate look like for LMI households? What does it look like for upper income households? And as we look at that and you see those two charts, those are two big gaps, and that's just nationally. So the chart on the left shows that, again, this is the widest gap. Low income households have a home ownership rate of 31%, and upper income households, or those in upper income tracts, have a home ownership rate of 75%. We call that a 44 percentage point home ownership gap. If you look to the chart on the right, we see the same thing. We see, non-Hispanic white borrowers having a home ownership rate of households of 73%. Contrast that with, Black households at 43%. That is a gap of 30 percentage points. Why that's important isn't only about housing equity. That's important because the demographic shifts that are changing, who are our first-time home buyers, are going to influence this and have a huge impact on that. So what we're really seeing is that these home ownership gaps are either continuing to widen or narrowing very slightly, even as affordable housing becomes more limited. And this is where we're finally seeing the perfect opportunity, and quite frankly, I think it's a necessity for the compliance mindset and the sales mindset to come together, and all of us start thinking about things. Growth and opportunity is a good thing for everybody. I just spoke at the NAREP policy conference Monday, and this is a new chart that I brought up, and really it's just trying to make a point here. But all of the different pieces on this chart are, I think, 30 of the largest markets for Hispanic households. And when you look at, there's a bunch of bars, and that bar, the blue bars, show what percent of the households are Hispanic. And so some of those are pretty high, obviously some of them are places where you'd expect them to be high, like San Juan and El Paso, but some of them aren't necessarily. And then when you look at the line charts on this, you see there's a top one, and that is the home ownership rate for each one of those cities for non-Hispanic white, and the blue is for Hispanic borrowers. The interesting thing, and I wish that I had a PowerPoint so you guys could see my finger, but I could touch that screen and tell you that, maybe my pointer can do it. This right here, that gap we talk about that as a gap, but this is your future growth, because by 2060, more than 1 in 4 people will be Hispanic. That's at 28%, and that's just Hispanic. So as we're moving forward, this really isn't only about housing equity. This is, and again, I can't say it, the data are telling us this. This is the best path to growth. However, this isn't easy. And that's kind of what Bernard and I are going to get into. There's all that opportunity, but it is not consistent. It is not spread evenly throughout the country. And one of the biggest challenges is that we see this, in how you think about strategy and how you think about, what you do to grow. We have to be running a sprint and a marathon at the same time. And that's because there are, households and people are at different places on the home buyer readiness continuum. There are people that are mortgage ready right now, market ready. There are people that are on the path, but not quite there. There are households that realistically are 5 to 10 years away from being able to buy a home. And then there's a group too, and I actually just added that group last night, that aren't interested. Those are different types of demand, and they're going to come up and they have an end game, an outcome that's at a different time horizon. That doesn't make this easy, because we're going to ask you to make decisions that are going to help the people who are market ready now, but you're going to have to be thinking about how in the next 6 months to 2 years you are going to have the right things in place to help those that are on the path 5 to 10 years out, building for readiness, and then maybe never. And, Bernard, if you want to bring up the football analogy, it's one that I like about this, kind of the way they're thinking of, we can think about this is very similar to how football dynasties are created.
Yeah, and I mean the analogy is there. It's just we have to fully think through. But the idea is, okay, well, what are your goals for this season? Right? It always starts with current season. What are you trying to do? Every team is trying to win the Super Bowl. Is that realistic for every team? You know, no offense to the Tennessee Titans if you're a big fan, but they're not winning the Super Bowl next year. They're just different teams at different stages in their programs, and there are different goals, and that kind of mirrors, the home buyer readiness continuum. Who's ready to buy a home? But from there, it's okay. Once you say, all right, here are my goals for the season. How do I achieve those goals? And so if it's okay, well, we want to bring it into mortgage terms. We want to grow, X% in this market. Great, that's a great goal to have. But now let's start with the goal and work backwards to say, if you want to grow X%, what are you going to need? Well, you're going to need some draft picks. That means you're going to need to recruit, some loan officers. Okay, and then you're going to have to make sure that the facilities that you already have in place are there so that your players can exercise. That's the tools that you're providing them and giving them. And at each stage along the mortgage process, it's making sure that you have all of the tools and that you're communicating your vision along the path so that everybody knows, from senior leaders down to loan officers, underwriters, the team, to make sure that everyone is going in the same direction. So that's kind of the thought behind the analogy.
And this comes up to us right now just because with the free agency being available and having a son that is about as obsessed with the Broncos as one could be. Hearing him talk about terrible decisions first terrible and then great decisions that Sean Payton has made makes me also realize that for leaders, sometimes the choices you make aren't always going to make sense to everybody. And so part of the challenge and the goal is going to be, how do we communicate this? How do we communicate that I am thinking about today? making sure we're all going to be okay tomorrow, but I want a dynasty. You don't want to be a flash in the pan and have 2 good years and then be bought or not have a future plan. And so that's kind of what the end goal of this and what we're calling this roadmap. The end goal is for each one of the lenders to become a dynasty to a sense, but also to just lift up the play, lifting up the play, and again, wanting to pull doing good things and having a good business together. This is the time for that. And so again, we're going to get into it, I promise. But this is the last thing that I think makes that we just want to show because at the end of the day, Bernard gave this parts of this I don't want to call it a speech, webinar, this information to this presentation to the MBA's Affordable Housing Council and to the Credit Union Council. And so, affordable lending is a focus of that. But affordable lending also has to be a focus of anybody who wants to bring new homeowners to the table. And, one of the things we're going to talk about is inventory at some point in this webinar series. But this specific table is really just highlighting how different things look at different markets. So we just told you that there's a whole bunch of lending opportunity, and it's national. That national number, those are big numbers. They look one way, and then as we start going more and more down, we look at Georgia, Atlanta, Fulton County, and then all of these little mortgage zones that we created of, combinations of neighborhoods. There are humongous differences in the demographics and the lending patterns in those areas, differences that will make the difference between whether you win or you don't. And that's why we say opportunity is national, it's everywhere. But at the end of the day, execution is completely local.
And that's, Laird, if you can go back for just a sec, I just wanted to add something. So that's exactly right. I want to reemphasize affordable lending opportunity is national, but execution is local. And that phrase, that sentence captures exactly what Laird and I were debating. She was saying, no, we need to have national strategy. I was like, no, we need to have local strategy. And in fact, we need both. And so the point is that at the top, that first row is looking at, if you look at the first row, first column, total households. In the US, there are 128 million households. Great. Let's get more granular. Let's go to Georgia. In Georgia, 4 million households. Wonderful. Let's get more granular. Let's go to an MSA, a metropolitan statistical area. Let's look at Atlanta. Great. In Atlanta, 2.2 million households. Okay. We can then keep going and drilling down to just Fulton County. And in Fulton County, 457,000 households. Okay, and then those markets underneath Fulton, listed underneath Fulton, are actually neighborhoods that we were looking at, distinct areas, distinct neighborhoods that each behave differently and have different demographics and statistics. And so going down and getting more granular again to say, okay, Alpharetta has 75,000 households, Buckhead has 60,000 households, Canaan Woods, Cascade Heights, 33,000, East Atlanta, 31,000, and so on. And so when you get to from that funnel of saying, yeah, let's look nationally, 128 million households, but then to execute against that and grow your share market by market, you need to start getting more granular from state to CBS to MSAs to counties, and then from counties into these specific neighborhoods. So that's kind of the mindset as you look at this slide.
And I just want to call attention, just to kind of hammer that home. If looking at those zones, Alpharetta has a median household income of 136,000. Contrast that with this Simsville, Battle Hill, Haven, 43,000. And there's some in the middle of the road. When you look at that continuum, some of the reasons people aren't at that mortgage ready place, or they're not ready to, get on a house today, are because of income. Some of those have to do with down payment. Some of it has to do with their credit. But you can see those differences here. So if you need to improve your lending in Atlanta, You might be doing a great job in Gwinnett, but you better look at Fulton. If you're looking at Fulton and you know you have, less market share than you want, you better look at the neighborhoods, because it could be that you're missing two key neighborhoods that are pulling your share down. And so we like to talk about, increasing your market position and your market share is built from the ground up. And again, part of this webinar today is to introduce this concept, but in the webinars that follow, we're going to dig in deep to some of these different things to really show you how to do it. And so this is something I came about, and I thought this was I don't know, I just like this saying. And so our industry kind of has a blind spot around this. And for decades, we've been managing production. We haven't really been managing opportunity. And I don't know if you can manage opportunity. You can pursue it, understand. I don't know if it can be managed. But some of that comes from the fact that we react instead of anticipate. I know that with a lot of the work that I'm doing with community needs assessments, a lot of it is about risk. But hey, let's stop talking about only risk. And, it says rather than focus on opportunities, but going back to Bernard's point, why not do both? Right? Why not find a way to do both? And some of this comes to do with what you've had available. A lot of data for, future focused, strategies isn't available. Another thing we've seen, and this is kind of where we're starting to have enough experience working with different lenders to see the exact points where strategies and outcomes aren't achieved. One of it is there are strategies and solutions that are excellent, but there's something missing. There's a key piece missing, and we'll talk about that. And again, intuition, that's actually really important data, but it needs to be paired with evidence. You can take expertise and you can take experience at a market level, and that's one of the things that is great about the playbook, but you got to put some evidence with it. And then at the end of the day, local market-driven solutions are messy. And that's something that, these have messy, the causes behind all of this, all of these gaps, decades, complex. So guess what? The solutions are going to be complex too. And so we're kind of getting into that, we're building all this up, and let's see what we're going to talk about. So we're basically talking about how we, through our arguments, went from having a mortgage opportunity playbook that was going to be presented at the Housing Homeownership Council meeting, that then somehow got slammed and not put down, and we decided to come back with something different. And I like the football metaphor here, because so now we're really talking about three pieces. We have a roadmap. A part of that roadmap is a playbook. And then the last piece of that, and this is where I think data is absolutely abandoned too often, is the scorecard. We've been creating market scorecards for clients for years, but we've never put it all together. And so at the end of the day, to take, opportunity and turn it into outcomes with data, because you've got data and opportunity as your core drivers, we basically are saying, follow the roadmap, because the roadmap's going to help you identify, quantify, and prioritize opportunity, and then build strategies. But that playbook, it's important to execute. You want executions to be how you execute to be consistent and successful. And then there's that scorecard, constantly checking in to see if what you're doing is working. And a long time ago in our webinar, we brought up this quote. It's a great quote. Without strategy, execution is aimless. Without execution, strategy is useless. And that's the story of how Bernard and I work. If we didn't both participate in this, we'd have useless strategy and aimless execution. Again, this isn't going to be a big topic today, but I just put this up here because of all the data points. There's so many data points. And guess what? They all matter, and they're used in different places in the roadmap. That's one of the things we're going to dig into when we dig into some of those steps that we're going to talk about. But I pulled in your favorite quote, Bernard. Without data, you're just another person with an opinion. So really, again, throwing the things out there, the questions, that are part of a discussion like this. What data do I use, and when do I use it? What does it mean, and how do I know what actions to take? So again, getting ready to show you that playbook and roadmap. But anyway, think of this, the roadmap, strategic decisions, enterprise level, short, intermediate, and long term. Where is the opportunity? How's it changing? Where are the gaps and why? Where should we focus? What should we do? And how do we know if we're successful? Playbook, who should I engage? Who do we need for our team? How do I reach more people? How do I grow relationships? How do I communicate our products? What's interesting about this is that the users of a roadmap, it really doesn't have to be national. It's like enterprise versus, on the ground, who's talking to the borrower, who's engaging the borrower. So I'd like to think, executives, they're pretty focused on that roadmap. You managers, area, regional, branch managers, you are right in between. You get some roadmap work and you get some playbook work. And then, for the people on the ground, the real estate agents, the loan officers, the community development relationship, advisors, this is a playbook. And that's where that expertise and experience comes in handy. But boy, there's some great data to pair with it to make it work really, really well as a part of the roadmap. So Bernard, you haven't seen this version of it. I just, we have gone, back and forth. I've had with probably 10 iterations. And the reason I'm explaining that is actually hitting every one of these steps is not the most important part. We think they're important steps. It's the concept, right? It's the concept of using data, using it for short, intermediate, and long-term thinking, and knowing that you have to have a good strategy or your execution fails. Bernard, you deal so often, and before I go through these, with a lot of our lenders who are pretty focused on the playbook parts. What have you found about, and how do you talk about, what's the difference between, having a tool that just shows you where recruiting is and then thinking about the roadmap?
Well, in terms of balancing the two together, to your point, I've been more focused on the market playbook portion of this roadmap of being able to say, okay, once we pick a specific market, how are we going to execute in it? But I definitely see the value of stepping back for different roles in the organization. Senior leaders, to your point, have to start thinking about opportunity across their footprint, across each market, and saying, hey, we're doing well in Charlotte, but we're not doing very well in Houston. Why is that? And starting to compare and analyze. And then being able to say, okay, do we need different products? Do we need different programs in these areas at a high level across the company? And then, finally saying, great, we're in 100 markets, but this year in 2026, these are our top 5, and we're going to focus our energy and our resources here, being able to prioritize. And then when we start to drill down into specific markets, figuring out, okay, here's our priorities, then we can figure out, well, again, what is missing from this specific market that we maybe have in another, but that it would really help us here. And when we get to the market playbook, that's really about the execution of saying, okay, yeah, here's Houston. Houston is one of our top 5 markets, but we're focusing on Houston right now. What are we going to do to grow there? And then, to give you a little sneak peek, I always like to talk about the six or maybe 7 steps in the market playbook, being, hey, you start with the data. Make sure that you have a forecast so that you know where you're going and know where to invest some of those resources, and go from there. But then we refine and measure. We have to make sure that we are actually tracking our progress, because, investing your resources somewhere without figuring out, are we actually making a difference, is not going to be that helpful.
I'm going to give you a chance to go into that in more detail. I did want to say one thing though, and that's, one of the reasons Bernard's focused on that is, if you look at our company and what we've done, we kind of we came about, actually, I think, my father started this company more than 20 years ago, and he was all about the roadmap. Trust me, I inherited that. It's deep in who I am. And to be honest with you, when we only had the forecast data that we bring to the table and we only thought strategically, we didn't really resonate. Executives would say, "Oh, I see the value of that, but I don't know what to do with it. I don't know what we can do with that." And it was when we brought in more tactical data that's a big part of the playbook, and we released these dashboards we have right now for the parts of the playbook that we started to make sense. So what makes us so excited is now that we are getting the playbook, to be something that's not just, bringing you the data, but also helping you know what to do with it. We're starting to build tools that allow the roadmap to be easier. So that is what we've learned too, is that you have to have both. And there's really no getting around that. I'm going to walk through this pretty fast, though. Again, part of this webinar is to just introduce the different areas. Hopefully there's an area or two or all that you're interested in and want to come join us to learn more about. But I'm just going to walk through these. First, just showing it in the order, but then I've got a short little discussion on each one. You know, Opportunity, it's the best word ever, right? It's future focused. Talk about opportunity. It makes people, underserved populations feel valuable. It means dollar signs to some. It means families and homes to others. It's exciting. It's positive. Look, we need positivity. And so leading and quantifying opportunity for you leaders out there, when you can show people the opportunity that's in a market, and the opportunity equals the reason for doing things, the reason for change, that's the value proposition, is how much opportunity can you get here? That's why it starts there. And knowing what a market has, and I actually am going to start with each one here, and I don't know why there's an M at the last one of those little check marks, but there's so many things you can do once you know opportunity. And so I had someone ask me, but what does opportunity mean? And I don't have that on the slide. What we mean by opportunity, a couple things. We used to mean loans and dollars, still mean that. But the more work that I'm doing in community settings, I'm really, there's other opportunity. It's called unmet need. So households, qualifying households. That's what we're talking about here. And when you know how many loans and dollars to expect from a market, again, you can be saying US, Georgia, Fulton County, different areas. When you know what to expect, you know how quickly it's moving, how is it evolving, how is it changing. When you know things like, how fast is it growing, who is the opportunity, what types of loans are the opportunity. Knowing all that is really where you can start doing things that are really important, like setting sales and market share goals, knowing your market position, and not waiting for HMDA data or waiting for the recorded data. You know your position when you're always thinking ahead. Recently, I've been helping a lot of lenders with calculating and setting LMI and CRA goals. If you're not thinking with that quantifiable approach in your brain, and you're not thinking ahead, you might have the best goals in the world for 2 years ago or last year, but you need goals that are going to work this year. Doing that, when you know the opportunity, allows you to right size your resources. I know that recruiting is a huge opportunity for many lenders, and there's a lot of focus on getting the best loan officers. But I have seen so many examples where too many of the best loan officers ended up at one place, oversaturated a market, and pretty soon a lender has too many for what they want to get out of it. And at the end of the day, they end up with 3 very unhappy top producers who go somewhere else. And if we know one thing about attrition, it's expensive. So knowing the opportunity teaches you how to right size your resources. It's how you know where to expand. Years ago, we had a tool called and this is market comparison tools. And that basically would allow you to look at all the markets across the country, figure out what you wanted for your internal strategies, and figure out which ones to go to. So this is important to know opportunity like that. It's how you develop new products. It's how you help open new branches, how you know what to do with mergers and acquisitions. But at the end of the day, if you don't know the opportunity, you don't know how much of your resources to invest in it. And that's what's key here. So it's about how much opportunity, how it's changing, and what kind of opportunity it is. Do you have anything to add to that one, Bernard, or do you want me to just keep going?
Yeah, yeah, just keep going.
This is the part I feel really passionate about, if you can't tell. Um, so kind of a big part of that, though, is then comparing markets and performance. And this is something that I will get on, on the soapbox about a little bit. And that's that a lot of comparisons, we think about peer comparisons. How do we compare to our peers? That's the first question community needs assessment kind of might want to know is how are we doing compared to them? Well, unfortunately, I have news that those homeownership gaps, that's not a question of whether, one lender or two lenders are not performing as well as other lenders. We have a market gap. So starting to understand that is important. So when we talk about comparisons and we're saying, how do you compare your market and your performance? We're talking comparing markets to markets. So if you have 5 markets to go into, you only have resources to go crazy in 2 of them, which ones? Then there's that market opportunity versus your performance. And Bernard's going to talk a little bit more about that. But that's the idea of looking at that, you can find gaps in coverage. And those gaps can be really a whole bunch of different types of gaps. And the next slide, we'll talk about what those look like. And then it's also, looking against how you're doing in one market to how you're doing in other markets. That can help you understand, is this a market problem or an enterprise problem? Do we need a DPA only in Atlanta? Or man, maybe we should be thinking about a national, or if maybe you're not national, maybe you have 10 markets, a DPA program or an affordable lending program for all of them. Or, hey, maybe we should start thinking of FHA, whatever it might be. These comparisons allow you to better understand how you're doing and help you better understand the demographics, the lending patterns, and the opportunity forecast, market by market. And there's a reason that's important, and we're going to get to that in just a second. You want to talk about the gaps, Bernard?
Yeah, absolutely. Finding the gaps in coverage. So the idea here is that we are looking at this map, and the map has different colors. Red meaning hot, blue meaning cool or cold. And this happens to be Fulton County again. And we're looking at an area where the blue dots here represent ABC lenders originated loans. So we can see the forecast. What we see this neighborhood or this area is how it's going to, how many mortgages it's going to produce this year versus the blue dots, which are how many loans were originated last year by ABC Lender. And in this case, you can see that, yeah, the ABC Lender has been here and has originated some loans, but there is absolutely much more opportunity to be had. And so when you focus on even a small fraction of Fulton County, in this case, this is the southern part of Fulton County, then you can identify a gap. You're saying, yeah, we are lending, but not nearly enough. Maybe our market share overall in Atlanta is 1%, but our share in southern Fulton County is 0.1%. And so that is where you can see there is actually a ton more business to be had in our backyard. So it's pinpointing where you are lending, where you're not lending, and then figuring out, okay, how are we going to deploy our resources in order to raise our share in that specific area.
And this one step is where we had a lot of disagreement, because the reality is this step needs to be in both the playbook and the roadmap. because based on what level of decision making and what you're thinking. If you're picking between markets, you need to have opportunity gaps. And some of that, like, you're seeing it like the actual loans on that map, hotspot versus us. But there's also ways to look at, what are our penetration rate gaps? What are our pricing gaps? What are our program gaps? Then you can think about gaps in terms of, which borrower groups have gaps in trust and education. It just goes on and on. At the end of the day, the market need gaps. We look at parity. Let's say a market is 20% Black and 8% of the loans or applications taken last year were to Black. That's not parity. It shows that we're not doing a good job. Does that mean every single household in a group is ready to send that application? No. But when you start looking at the statistics of it all, you know that there's a lot at play, and that with a lot of changes and strategies and tactics, we could start bringing more people in. So the gaps we talk about in this stuff are pretty wide. But it's a fascinating way of looking at it, because we can't tell you how many times we've seen even lenders who are number 1 and 2 in their markets. We have great coverage everywhere, and we throw this on there. We look at their loans, and they're like, wow, this is how we keep growing. This is how we end up not just taking share from our competitors, but widening that pie. We'll go back. Yeah, it's one of the other ones, Bjorn, you can talk about it at a market level. And so then this is another piece that not every time you're thinking this through do you have to do this. But at the end of the day, we were talking about Fulton County, and actually Fulton County, we broke into 10 different like sub counties or zones. And actually when we took Atlanta, we broke Atlanta into 29 different zones. The differences between zones are huge. If you had the same strategy for every zone or every market or every neighborhood, you'd fail in at least 60% of them, because it's just not going to work. And that's what's complicated. How do you scale what's fundamentally local? So one of the things we've developed is a way for you to prioritize those opportunities. If any of you have gone through a community needs assessment and you're working with regulators, it's a great thing to figure out the needs. Which census tracts are high need, where our needs not being met. And then you can look at your own coverage and say, okay, where do we have the biggest gaps? And you think, well, wherever the gaps are the biggest and we're not doing well, those might be able to be our top priorities. Maybe not. But that same goes, that's true even if you're not thinking in those terms and you're like, oh, well, a priority to us right now is to increase our, let's say doctor lawyer loans. Okay, so then which of these different areas should we be prioritizing? Because the reason that it becomes so expensive to hire and fire and develop, do community lending is because we aren't prioritizing our opportunities, and we're spending inappropriately or inefficiently, I should say, in the wrong places. Going through this system, and everybody's scoring is going to be different, because at the end of the day, you're all different. What's important to a bank, a big national bank, and a small credit union, and a mid-size IMB, different business models, different cultures. It's not going to look the same, but you have to know how this works for you. And that is where we get to the part where it really gets fun. And this is where there's some overlap. Once you prioritize, especially for organizations that are, you're looking at, 100 different markets, you can't do these deep dives and drill downs at 100% in every market, at least not when you're getting used to it. Maybe down the road you can. So we say, which are the priority markets? Let's dig in, drill down, and understand them. And that's where, Bernard will work and create those neighborhood zones. And what's interesting, once you get to step 5, you actually, for step 5, for these target markets, you go back and you do steps 1 to 4 again. That's the way it works. But once we get there, we get to the point where now that you're starting to get to know so many things, and here's all that data again, this is the piece that, that I think is fascinating, is complicated, but it's how do you look at those gaps, the challenges that are there, and figure out what strategies are going to work. That's the last piece of this that the roadmap handles. Come up with those. There's again, I only brought up 8 of the questions. There's about 80 questions to ask yourself. Why you have a gap, why the market has a gap.
So
But
Larry,
once you know why, what?
Larry, I was just gonna Jenny had a question, so I was gonna so
Sure.
Jenny, Jenny, go ahead, please.
Can Jenny talk or does she have to type?
Um, I don't know. I pressed allow to talk, so uh, you know, feel free to come off mute, Jenny, or you can type your question in the chat.
I don't know how to work this well enough.
Okay. Well, no worries.
We will save time at the end for that
Yes,
question.
yes, perfect.
Um, because at this point, again, this is the point. What is this? This assess challenge and design strategies. If this is a CNA, this is a strategic markets plan. This is everything you need to know to grow, to improve. But you might come up with the best document in the whole world, the best strategy. But if you don't have this next step and you don't have the playbook, you can you know, say goodbye to it. I'm going to let Bernard take over because this is the part he likes. And I want to say one thing though, Bernard, you only have a couple of the things on here that would be a part of a playbook. That's probably got 80 things too. But I'm going to let you take it for the next couple slides.
Okay, so just go to okay, from here, executing.
Yeah, and that was my slide, so I don't think it doesn't look like your slide.
No, no, it doesn't. But I can talk about pieces of the playbook. So pieces of the playbook similar to some of the things we've seen earlier. Yeah, starting with the data, being able to say, okay, on the left-hand side is Fulton County. That's the forecast for Fulton County, and saying again, blue, colder area, red, hotter area. So those are the specific neighborhoods in Fulton County that are going to have more business. And then on the right-hand side, being able to add things like originated loans by the lender, and also being able to identify, for example, low to moderate income census tracts in pink or in magenta. So that again allows you to say, okay, we have the data, we know what is happening in our market. And then we can go next to finding those gaps in coverage, which I started talking about a little bit earlier. But again, it's the same concept. It's just happening in different parts of the roadmap. So being able to say, here's where we're lending, here's where there's opportunity. Is there overlap? Hopefully there is, but when there's little overlap in terms of you're lending there, but not as much as the opportunity, then you can say there is a gap here. And that's what the circle represents, which leads us to step 3. And then,
After talking about that, Bernard, I love it. And explain like how often are people expecting what they see?
even a market where you're looking at the number one lender and they have, let's say, something outrageous like 15 or 20% share. That's a huge amount of share. So even at that level, when lenders are just dominating a market, there are always areas where they could be doing better, always. Because the simple math is, hey, if you're doing perfectly, you would have 100% share. That's just not the case, right? So there's always room to get more business. And in this specific case, when we say, hey, let's create that mortgage opportunity zone, which is a custom market, a custom sub-market. In this case, on the right-hand map, we are looking at just Southern Fulton, so just the area in orange. Okay. And then saying this is our Moz where we are going to be spending our time, energy, and effort and money, which leads to,
Because
yeah,
the gaps in coverage aren't there. And the only thing I want to add to that is we'll get to that at the end about
yeah,
the not taking share, but growing the pie.
yeah. So step 4 is then once you've created that Moz, that mortgage opportunity zone, that custom market, you want to see the competitive landscape. Who is actually there doing the business? Which loan officers? Like you can see at the top of the table, who are the loan officers who are doing the business there? Who are the lenders? Who are your competitors, your direct company competitors in the bottom market? Going to the next slide. Who are the listing agents? Who are the buyer agents in that Moz? And then finally, the last competitive landscape, who are the top builders in that area? So you're looking at loan officers, lenders, agents, and builders to figure out, okay, what those are our channels, those are our avenues to be able to grab more market share.
And
So
I just
from
want to add, can I add
uh
one thing on
yeah,
that? This is about the how much share they're taking, but this is where some of the data tells you, how they do this last year, even before we have HMDA data. You can also layer into this, all the data on, okay, what products are they using? What are their application? How's their underwriting? What kind of pricing do they have? Look, can I go look at their website? How do they talk to the borrower group we're getting at? This is why this is so critical. And when you start putting those pieces together and you create these competitive profiles, you learn so much more about the market.
yep, absolutely. So then once you've addressed the competitive landscape, you go into step five, which is, well, what is actually for sale? What is in my market? What properties are actually on the MLS, for example? And here again, you can use the mapping, the visualization to see, oh, I see every diamond in that orange area represents an MLS listing where if I click on it, I can see the MLS number, I can see the listing agent name and contact information. And for example, if I'm an LO looking at this, the first thing I would do is say, "Oh, you know what? I would like to contact Rhonda." Well, good thing the her contact information is there, but even before you do that, I would click on that. There's a little Zillow link in the address line. In the address line, there's a little Zillow link, and you could click on that to make sure that the property is ready to be sold, is on the market, everything looks good. And then
And if you have a pre-approved borrower, who is looking for certain characteristics, that even tells you that stuff too.
yeah, I mean, in this specific step, you would be talking, you would say, "Hey, Rhonda, this is Bernard with ABC Lender. Let me tell you about our products that can help you sell this property faster. Let me tell you about our programs, such as down payment assistance or grants for which this property may qualify for. And we even have some pre-approved borrowers that are looking to move into this area. Work with us because we're providing you this value." Which then leads us into step six, which is, okay, we've looked at, the competitive landscape, we've looked at the listings, but now what are the other organizations in my market that can help me reach end borrowers or, if I'm a credit union and members? And in this specific example on the screen, every green square that you see represents a faith-based organization or a place of worship. And, the highlighted one is this Global Church of Grace Ministries. So now I can pick up the phone, call the leaders of Grace Ministries and say, "Hey, this is Bernard with ABC Lender. We would love to sponsor an event, or we would like to have a lunch and learn or a homebuyer seminar." And by doing that, we're doing two things. Number one, we're keeping the ABC lender name top of mind for anyone associated with the community. But two is we're demonstrating our commitment. We're showing the community that we are investing in it. We're putting our money there. And so usually
Well,
the unofficial, sorry, Laird, the unofficicial step seven is repeat. Make sure that
yeah.
you're going through this on a regular basis. Yeah, go ahead.
Well, in one of our, there, like, this is where we disagree, but he didn't show you all the examples in the playbook. Playbook has some other pieces depending on what you find when you're digging in. But one of the things that's really been interesting is we worked through this, and we have all of these in the tool that we provide. The different community partners. One of the things we're going to talk about in one of the later webinars is how to do that effectively. It's something that I personally have learned so much, in my work in Seattle and in Columbus and Philly. Um, every market is so different, and they're important players. And like, even knowing which top employers have, and what the role is, you learn so much through this step. And it's not just finding community partners for outreach. It's about, what can you do as an organization? I mean, I see a lot of people say, "Oh, we're really involved." Yeah, one guy goes to these meetings. That's not how this works. What are the actual strategies that work? Just like, we've seen a lot of with the step Bernard was just talking about, that inventory step. That's probably one of the most successful, relatively simple use cases that our clients are finding with the playbook. And it's not just sending to information and connecting with the agents that fit who you are. What works is because you're understanding the value proposition and you're providing it. You're understanding your value proposition and you're providing it. That's one of the great pieces of this. I know we're getting close to the time, so and we won't spend much time on this, but I can just tell you this is lost a lot. And it's, how do you make sure that what you're doing is working? How do you set outcomes and measure success? And when you do that, at the beginning, you start sending what you want out of this. That ties to the opportunity. Some outcomes are going to be immediate and some are going to be longer term. At the end of the day, outcomes are what keep people motivated and moving forward and allow you to tweak when you start seeing something that's not working. And that's where the efficiency comes to play. And fundamentally, that's what makes this work. When you keep this long-term strategy, continuous loop going on and on. That's my last slide, Bernard. I don't think
Okay.
I've ever gotten through a deck ever, ever.
Excellent, excellent. Well, again, we're throwing a lot. We're throwing a lot at you. We're presenting a lot, but we just, this next webinar is scheduled for May 6th, right? Yeah. I believe that's right. So May 6th, and the point is that we can focus on these specific steps of the roadmap individually so that we're not, throwing all this information at you. We can go step by step and really take you through, hey, what do we mean when we're talking about a specific area of the roadmap?
Yeah, we could never have touched on in detail on all of these pieces, but I guarantee that there's an art and a science to this, and it works, and it's fun. I mean, I think it's fun, but we're happy to stay on. Like, I know that webinar has to end, but if anyone has questions or wants to keep talking, I mean, I can do this for hours. I guarantee you.
She can.
Bernard, you might have to go somewhere else. But if anyone has any questions, I know we didn't get to hear from Jenny or anybody else. Feel free to. Also, another thing, if you have a particular interest in like a particular type of strategy, send us an email or even pop it in here. We would love to bring in and talk about some real problems live, because you don't have an easy job. This is complicated, and we'd love to hear about the specifics at both a strategic and institutional level and at a market level. And again, one other thing, this works for and is for organizations of all shapes, sizes, and types, even for non-lenders.
So we want to thank you all again for sticking through us for this hour. We really appreciate it. And we look forward to seeing you next time on May 6th. Again, that link is in the chat. Feel free to register even if you can't attend live, because we'll be recording it and sending that to you afterwards.
And I'm going to put Bernard's email in the, you probably have it already, but I'm going to put it in the chat. And mine, I guess I should put mine too.
Yes.
If you guys haven't figured it out, we're married. So that's why we have the same last name. Although someone once asked if I was his daughter.
Yes, because I look ancient. But
No.
have a great rest of your day, and we'll see you next time. Really appreciate it. Thank you.
Thank you.